Continuing our discussion in Chapter 6, we are now moving to objective number 3 for merchandise inventory, which is applying the lower of cost or market rule to inventory. Okay, slide 32. Lower of cost or market rule. This concept for accounting is an example of the conservatism which we talked about in our last objective, in so much as applying realistic expectations to the financial statement. Inventory is required to be reported at its historical cost or market value, which is the same as the current replacement cost. Historical cost, which is what we actually paid for it, or its current market value, whichever is lower. If the current market replacement cost is lower than its historic cost, we write the inventory down. How do we do that? We debit the cost of goods sold, we credit the inventory. So under lower of cost or market rule, at the end of the financial period, the accountant sits down, looks at the historical cost, which will be the amount on the balance sheet for inventory, compares it to what the replacement cost would be at that date, 12/31, usually the end of the financial period. If market is lower, we write it down by debiting the cost of goods sold and crediting inventory to get the inventory account balance to the current replacement cost. Do we ever write inventory above? No. We only apply the lower of cost or market rule. How do we disclose this? Slide 34. We disclose this as either a parenthetical comment within the statements or in the financial statement notes at the end of the financial statements. Okay? In the notes to the financial statements, we disclose either the lower of cost or market, or as a parenthetical note inside the statements themselves next to the inventory account. So how do we apply this lower of cost or market rule? Let's flip back to our text, page 337. 337, exercise 6-22, page 337 at the bottom. Prepare Eagle Resources balance sheet at December 31st of 2008 to show how Eagle would apply the lower of cost or market rule to inventories. Include a complete heading for the statement. That's our requirement. So let's look at how to apply the lower of cost or market rules for Eagle Resources. Eagle Resources, which uses the FIFO method, has these account balances at December 31st of 2008 prior to releasing financial statements for the year. Inventory had a beginning balance of $12,000 and an ending balance of $14,000. Cost of goods sold has a balance of $72,000. Sales revenue has a balance of $118,000. Eagle determined that the replacement cost, current market value, of the inventory at December 31st was only $13,000. Prepare the balance sheet to show how they would apply the lower of cost or market rule to the inventories. So what we will do is we will compute what the difference in the inventory is. The ending balance was $14,000, but under current market value it's $13,000. So we need to adjust the inventory by $1,000. So what we will do is exactly what we discussed on slide 34, is we will debit our cost of goods sold account, we'll credit our inventory account in the amount of $1,000. And the comment we would write would be to adjust inventory to the lower of cost or market. Okay? So debit the cost of goods sold for $1,000, credit the inventory for $1,000. Our cost of goods sold then rises from $72,000 to $73,000, our inventory balance goes from $14,000 down to $13,000. Okay, so we decrease the inventory account by this $1,000. Next part of the problem, we need to show how they would display the amounts on the income statement. So under the income statement, we would have Eagle Resources income statement for the year ended December the 31st of 2006. Sales revenue would be for $118,000. Cost of goods sold is $73,000. So the gross profit is $45,000. Just looking at the requirements, the requirements said prepare Eagle Resources balance sheet as of 12/31. Okay, so on the balance sheet you would just have your inventory account with the statement that said lower of cost or market, showing a balance of $13,000. So I think this looks like a publisher's error. They're saying prepare the balance sheet, but on the slide we're showing the income statement. So I'm telling you how it would be shown on the income statement. Inventory at lower of cost or market in the amount of $13,000.